agendas.
Okay, I have 10 o'clock, so I'm going to call the York County Board of Commissioners meeting for February 19th, 2025 to order. Welcome back our veteran Fred Rudisill to lead us in the pledge, and we welcome back Reverend Cara Tancreda to lead us in the invocation.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Let us pray. O Lord our God, ever present in our world, we look for you to inspire all our leaders. May all the people of York County be empowered to make our world better. We pray your blessing on our meeting today. May that which is done here today give you honor, glory, and praise.
Amen.
Okay, we'll move on to item number 2 on the agenda.
I'll make a motion to approve the minutes from the February 5th, 2025 Board of Commissioners meeting as submitted.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. We'll move on to the Chief Clerk's report.
Good morning.
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 We have a comparatively short agenda today. There's really only one item that I wanted to highlight. Item number 12 on the agenda is the approval of an agreement for the Human Resources Department for a new system that involves applications tracking and onboarding. They've been working with this vendor for quite some time. This is going to provide some significant efficiencies in that process. It's going to allow individuals to complete all of their onboarding electronically on their phone, and gives us a great deal more data from which to gather information about how we are filling positions. And I think this is something that has been sorely needed, and I'm very excited to see it in action. That's all I have.
Any questions for Mr. Bunsky? All right. I will open it up for any public comment as relates to items on the agenda. Hearing and seeing none, we'll move on to new business.
Madam President, I move to approve items number 1 through 18 on this morning's agenda.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye. Opposed? Motion carries. There's no other business that I'm aware of to bring up today, so I will open it up for any public comment. Hearing and seeing none. Also let the record note that there were no executive meetings between our last session and this session. If I could have a motion to adjourn.
I'll make a motion to adjourn the meeting.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? Motion carries. We'll move on to Salary Board.
I'll make a motion to approve the minutes from the February 5th, 2025 Salary Board meeting as submitted. Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. I'll open it up for any public comment as relates to items on the agenda. Hearing and seeing none, we'll move on to item number 4 on the agenda.
I'll make a motion to approve the positions, salaries, hours and work, and fringe benefits as provided by existing collective bargaining agreements or as set forth in the York County Employee Handbook or York County Policy Manual for the following departments and row offices as stated below, with no additional benefits or concessions unless otherwise noted, and there is listed in the agenda. Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. There were no executive sessions since our last meeting. I'll open it up again for any public comment. Hearing and seeing none. If I could have a motion to adjourn.
I'll make a motion to adjourn the meeting. Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? We are adjourned. We are going to move the Board of Elections meeting up in front of Retirement Board, since Retirement Board will be a little bit longer today. So I will call the York County Board of Elections meeting to order.
I'll make a motion to approve the minutes from November 22nd, 2024 meeting.
Second.
I have a motion and a second. Any discussion? Hearing none, all those in favor signify by saying aye.
Aye.
Opposed, motion carries. I will open it up for any public comment related to items on the agenda. Hearing and seeing none, I'll turn it over to Brian for his director's report.
Good morning, Commissioners. Today, I'm coming to talk about the motion that's on the agenda. I'm going to be asking for an amendment to it. I would like to change the last sentence where it says which abolished the wards and make that which abolished the wards resulting in 3 precincts. This is to clarify that we will still have Wrightsville 1st Precinct, 2nd Precinct, 3rd Precinct versus Wrightsville 1st Ward, 2nd Ward, 3rd Ward. As of right now, polling places in Wrightsville will stay the same. Voters, there'll be no change to voters other than how they vote for a borough council.
Okay, any questions for Brian?
Brian, this might be a dumb question, but is there anything different between wards and precincts?
The big thing for Wrightsville is going to be, because right now, on January 14th, Wrightsville still had 3 wards. So their borough council was comprised of 6 people, 2 from each ward. With this, it's going to be an at-large borough council. So instead of being 6 people, it'll be 7, and they can go from anywhere in Wrightsville instead of 2 from each ward.
Okay, thank you.
But as far as voting is concerned, nothing's going to change.
Correct.
There
Nothing's
will
gonna
be
change for the
3
voters.
areas where people can vote
Right.
in Wrightsville.
Yes, ma'am.
Any other questions for Brian?
I have a question, just to circle back for clarity. What should the amendment be to this motion? I just,
Where it says which abolished the wards, I would like to add the wording resulting in 3 precincts after the word ward at the end of the sentence.
okay, thank you.
Sir.
Further questions for Brian? Okay, we'll move on to new business.
I'll make a motion to adopt the alteration of election districts in Wrightsville Borough pursuant to the Wrightsville Borough Ordinance passed on December 2nd, 2024, which abolished the wards resulting in 3 precincts.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. Open up for any public comment. The only thing I will add, although most folks who are running for office this time probably are aware, but petitions can be circulated February 18th through March 11th. They must be returned by March 11th if you desire to be on the ballot in the primary election. So we have county row offices up for re-election. We have Judge of Elections, Minority and Majority Inspector up for re-election. We also have several school boards who have positions to fill. So if you have an interest, you can certainly look at our elections website for those positions. But specifically related to school boards, we encourage you to go to your school district's website to look for positions. Okay, if I could have a motion to adjourn?
I'll make a motion to adjourn the meeting.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed, we are adjourned. Lee, we're on to retirement board.
I make a motion to approve the minutes from the January 15th, 2025 Retirement Board meeting as submitted.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. We'll open up for any public comment as it relates to items on the agenda. Hearing and seeing none, we'll move on to new business.
I make a motion to include the following individuals on the monthly annuity payment list as listed below. Rhonda M. Heilman, Public Defender. Tracy Jo Kelleher, Prison. Heather L. Lappy, Adult Probation. Mark R. Levenstein, Aging. Dorothy M. Osmond, CYF. Melody S. Robinson, Register of Wills. Joey A. Rudd, Prison. Susan K. Seneff, Assessment. Crystal M. Snyder, Domestic Relations. Robin A. Thomas, Voters. Faith Euler Miles, District Attorney.
Second.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries.
I make a motion to ratify the following alternate pays on the monthly annuity payment list as listed below. Jeffrey A. Yan, no
Second.
department.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed, motion carries. Lee, welcome back.
Pick the coldest day of the year, right?
That's okay.
Okay, well, good morning, everybody. Oh, new microphone. Nice cold morning to come into, and obviously a lot going on in the economy, in the markets, in the world. So what we'll do is spend, as we normally do, the first 5 minutes or so just kind of looking back at Q4, but more importantly, looking forward in 25 here of what to kind of expect from the markets. And then we'll review each of the three pools at a high level, like we normally do. So if you're following along in the books I gave you, if you go to page 10, tab 2, and then if you could just go to the next page on the PowerPoint, or if I have the clicker, I can. Oh, perfect, thank you. So as you can see here, we did have a little slowdown in GDP in the fourth quarter. Was revised down to 2.3 from 2.5, and it was really on the back of a slower business investment. After a couple of years of strong business investment, companies are looking ahead at 25, 26 at potentially lower growth. You see that with those checked GDP boxes. They are actually been revised down a little lower more recently. And that more than offset the kind of surge you get around the holidays and consumer spending. But as I said, over the previous couple of years, you've had really great investment, particularly from the Fed, such as the Inflation Reduction Act, CHIPS and Science Act, which has put a lot of money into kind of reshoring ideas of building back out manufacturing capacity so we can bring goods back and start making them here in the US again. Kind of something we've learned from the pandemic. If you go to the next page, so even though we've seen a bit of a slowdown, the economy is still doing quite well here. Outside of a kind of unexpected economic shock, unemployment's remained steady. Actually came down 4.2 to 4.1 at the end of the year. It's actually down to 4% currently. And that's the main reason why the Fed is saying, we're on a pause on rate cuts at the moment. And to add to that, what we've seen and kind of what played out post-election is really want to talk to you about in December, is that you're going to get that bump to equities in the short term on the thoughts of deregulation and tax cuts coming. That's what we saw in Q4, particularly in the growth stocks. However, I did warn that it is potentially, tariffs, a smaller workforce could impact supply chain, and that might have pressure on inflation for the longer term. And that's sort of what we've seen this year. The latest CPI number actually did go up again. And so, again, kind of reinforces what the Fed have said. We're in a pause mode. What began at the beginning of the year, potentially 2 rate cuts this year, is now down to 1, and that's been pushed all the way back to September. And there's even folks out there maybe suggesting we might even get a rate increase again. I don't believe so. I think that CPI number, it normally spikes a bit in January. Beginning of the year, people raise prices, rents go up. So it'd be more important, I think, to see this February data before we determine sort of where this year is going to go. Just next page, just quickly, internationally. US, very fortunate to be somewhat of a closed economy. However, overseas, they're very much open, particularly Europe. And you're nearly 3 years in for Europe being in contraction mode, PMI 50. And it is why the Fed the ECB have really led the Fed in bringing rates down. It's normally, if you look historically, it's normally the Fed that leads the world from rate direction. But actually, Europe have been lowering their rates quite aggressively because of that. And that's really had 2 impacts. One is our dollar is extremely strong. So if you're a foreign investor, you're sitting in your investment returns in a minute, when you bring those profits back to the US, it buys less dollars. So that return goes down. That's the impact of currency. And with their rates coming down, it's dropping their currency somewhat. However, you have started to see some green shoots, and actually Europe is leading the way so far in 25 but they're coming off a pretty low valuation to start with. So any little jump is actually quite a big price return than investing in like NVIDIA at this point with valuations that are sky high. So just to wrap up on the next page, what did it mean for indices? Remember the last meeting, everything was green on the plus side for the quarter. It was a bit of an abnormal to see that. And you can see when often that happens, it tends to reverse the next quarter. And that's what you see. Everything was pretty much negative outside of credit and the largest tech stocks within the US. So much that actually growth outperformed value last year by about 19%, and large cap outperformed small cap by 16%. That's how concentrated the market was. 3 out of the last four quarters last year were primarily driven by just a small number of names. You can see the impact of currency. They see non-developed stocks down 8%, about over 10% behind the US. However, 7.5% of that was purely the US dollar appreciating. And so in local terms, they're only slightly negative overseas. And as I said, doing much better now in 25. Core bonds obviously took it on the chin as yields spiked in Q4. Prices go down, and you see that with core bonds down 3%. You do have, with your private credit, your bank loans, you have high yield too. Those obviously do better in that environment because of the floating rate nature. Rates don't impact loans, and high yield tends to be shorter duration too, so you can see slightly positive there. And then just to finish up at the bottom of the page, and again, these are the listed on, equity securities of these inflation-sensitive assets. You guys are actually in the private ones, so they don't fluctuate as much as this. If you remember, REITs were up 16% in Q3 when rates came down. You show rates go the other way, they take it on the chin. So it's why we always like you guys, when you're a big enough fund, you can be in private. You don't get that fluctuation. These are very much listed infra, and REITs are very much like fixed income. They're like fixed income proxies. That's why you diversify with privates. So anything on the markets? No, we'll get into your pools. Oh, perfect. So you can see you ended the quarter here at 562 million. You now pushing about 580 million. You've added 15 million so far this year. I did put an update, at least for January, in the back of your book. So you're up about 2% so far in 25. So that more than covered that 8 million loss that occurred in Q4, which was primarily towards the end of Q4, which led to that negative 1.4% return. So what that will mean from when you got your kind of estimation for what ADC could be for this year, probably be relatively close this year because we didn't get that normal run up in the Q4, which tends to lower it. It's just something to be mindful about as you're looking at budget for 25. It'll probably come in close to whatever you may have received from Boomershine. What well for you for the quarter, you're going to see shortly real estate, after 2 years of negative write-downs, was finally positive, and we'll talk about that shortly. Infrastructure is making that high 2% every quarter for you, continues to do that. And obviously your shorter duration credit and high yield, which are less impacted as rates move up. The headwind for the portfolio was just the higher quality equities that you have. Obviously, when it's a very narrow risk on low quality run, your equities will lag. Timber farmland was a little behind, but only 30 bips, and that's really because they do have a couple of listed securities to help liquidity, and they were impacted by them rate increases. And then obviously your longer duration bonds as rates went up. But the good news, longer term, you can see, the fund has gained 298 million. Actually, for the year as well, you were well above your assumed rate of return again. So that will bode well. 4 of your last 5 years have been double-digit returns. So that should bode well from a funding point of view when Boomershine come to do your 2025 report. And then 10 years, quite a bit above your assumed rate of return. You gained about 300 million, which is about half the portfolio in gains the past 10 years, which is great. About 7.5%, really close to that policy index. But as you remember, but you're doing it with a lot less risk involved. So from a risk-adjusted point of view, a lot better there, and that's why you're in the, around that top quartile mark. We were able to negotiate some lower fees. Your Clarion fees dropped from 85 to 80 basis points now for your all-in real estate. And TA Realty is now coming down to 75 basis points on real estate for you. And your private credit is down at 80 basis points, but one turn of that is leverage you don't charge the fee on. So it's really 40 basis points you get in private credit. So we've been really able to squeeze some fees out of your fund because you have a bigger fund now, and we're able to use that scale and just the scale of our OCIO program to keep as many dollars in the fund as possible to keep growing over the years and compound out the pay them promised benefits. We have been getting the last 2 years those real estate dividends coming out because we said it's highly likely you're going to find write-downs in real estate. That's what you've seen. What we didn't want is for you to get a $100 dividend, reinvest it back in, it's $90 the next day, didn't make sense. So you have been receiving them every quarter, and we've been using them to help pay the benefits, so you don't have to sell much in the way of equity or fixed income at that point. Now, in the looking ahead, one thing worth considering, and I'll show you why on the next page just quickly, but is maybe turning those dividend reinvestments back on at this point. The managers have really changed the portfolios to reduce their office. They're in a lot better shape now. Most of the office has been written down about 50%, and on average, real estate is down about 25 to 30%. So now it tends to be it's like a good stabilized position, maybe to enter back in at this point. And then we do have some upcoming changes, and then we're going to be talking with the investment committee about switching Twin, and I've mentioned this before. Once this volatility subsides, move them more like the core index, because currently it's very defensive. They can't own NVIDIA and things like that, so don't pay dividends. It was very useful for you 8 years ago when you didn't have all these diversifying assets, when you had mostly equities. Now you have less in equities. You don't need so much of a really defensive type equity there, because you're getting that from your diversification. If you want to turn over, just 2 pages just to finish here. Yeah. So the page before, just quickly to show you real estate. You are about 1.5% on the weight, just over 1% on the weight. So we suggest just by turning dividend reinvestment back up, you will gradually bring your way back up, which is a better way than just going straight back in to target at this point. Because then if you get more growth there relative to the others, then you're going to be overweight. So just we dollar cost out, we dollar cost back in. It's the way to do it. And then final page for you, we'll just at total fund level because of time. You look at last year, and this is net of every fee, so obviously gross, you're around about that 10 mark, but even lagging your bench because you're very much more diversified, and that whenever it's above the assumed rate of return, you tend to lag that policy index per se. But you're still around the median mark because most funds underperformed last year because they just can't own as much in their mega tech. Growth doesn't make sense. And you can see longer term, anyway, if you see the dots at the top here, your rankings are, in the top quartile or longer term. So that's the pension fund. I can get into some of the more granular detail of each manager. I know you have that in your book, or I can move to OPEB.
I do have one question.
Yeah,
so
sure.
The past couple times you've been in here, you've talked about Timberland, and let's just say it's lack of performance, and I saw again they're down. Is that something we should consider divesting ourselves
we
of?
have put in a request to sell out of it. It just takes a year from when that goes into growth. You have been getting it out, you'll see. You'll see in the big book where we show all the flows every quarter. You have been getting those redemptions back a little piece each quarter, but it will be wound down, and then you can make a decision if you just want to do something like US farmland or just add that go into infrastructure, where you've been getting 2.5% to 3% every quarter. Question. So did you want to get into any, you got so many managers, I don't know whether you want to get into all of them, but or we can move on to OPEB.
Okay. Barb, okay.
Okay, so on the OPEB fund, again, 42 million at the end of the year, and you added another $1 million so far this year again. You see you're at about 43 million. Portfolio loss was a little worse here for the quarter than the pension. Why? This is obviously a smaller pool. It's not as diversified as much. So you didn't have the privates to help keep that positive. What worked well is running this real estate underweight. You've been underweight target by about 150 basis points. And then your core plus fixed income. This is the aggregate bond. This year, we'd like to do an asset allocation study actually for the pension fund. It might be a time maybe to consider moving out to the aggregate bond on there. Now noting that over the next couple of years, rates are still expected to come down. And with doing that, you can use Core Plus, which allows a manager to roll in and out of high yield and bank loans when spreads move. What didn't work as well for you was just your actively managed equity, again, the higher quality, and the listed infra because rates went up. But again, since you guys funded this about 8 years ago, you gained, about 7 years ago actually, 7.5 years, gained over 15 million. Over 7, actually similar long-term return like you saw in the pension, around about that 7.5% there, puts you in the second quartile. This is going to look a little bit more like index because you don't have as many diversifying products in there. So, and to keep costs low at only 32 bips, you do have a bit more indexing in this. And then pretty much what we've suggested on the pension side is bringing you back up to target here with real estate over the remainder of this year on the OPEB side. And I think this one's a little bit more important because that's really your only diversifying asset in this one. So we may get there a little quicker on this one back to target. In the pension fund, you got private credit as well, and you've got other diversifying assets. So, any questions on the OPEB? It's pretty much the same managers as the pension. If not, we'll wrap up on the DC. The defined contribution plan still seems to be a great tool here and savings plan for the county. About $31 million now. I remember when guys first did a search, I think it's 2018 on this. I think we're about 18 million, so it's really caught on, which is great. 2/3 of your employees are where they perhaps should be, which is just in the target date funds. So they're allowed to kind of, drift over time, and you can sleep well and not worry about trying to, move your portfolio around. Those that are doing them themselves, that mix is a little equity rich, 80 relative to 20 of fixed income. But actually, I think that is quite smart, really, for a fund like yours, because everybody has the DB plan as well. So think of that, that's your guaranteed kind of money. So why don't you have a little bit more equity in this one, to try and grow it a bit more, because you've got that safety of the DB plan. So, the more I look at that, I think, that's pretty smart what people are doing there. So that's good to see. 3/4 of your funds outperform. And then the fees are still extremely low, just 11 bips from the investment side. And your participant engagement keeps trending positively, which I like to see. If you look at the bottom of the page there, over the past year, participation rate jumped from 20% to 43%. So a big jump there, which is nice. Contributions also continue to jump up just slightly, but that was good to see. Noting people are contributing in the DB plan too, and those contributing over 10%. Once again, continuing to that positive trend up, about another 80 basis points. The folks have really took advantage of the program and have been investing well and growing their funds. And I'll wrap you up on the next page. Just a few more things to note here. The top half, actually, I showed this before, is the fact that, when you look at your benchmark average median of the lifetime income score, that means folks that are going to have expect to have the assets to retire with. You're quite a bit above what we see out there from that point of view. So once again, just backing up what you're seeing from a contribution rate point of view, it looks like the employees are pretty well positioned here for retirement. And then one thing to note at the bottom here, just to wrap up, is the trend of folks that are actually enrolled with Empower into getting some extra advice there. And you can see there's 241 employees currently, which is about just a little under 5 million of the assets. So that's about 27% of the participants, but actually less assets, about 15.8% of the assets. So that would tend to mean maybe some more of the younger ones that have smaller accounts that are just getting into it, that are wanting some advice at the beginning how they should kind of invest. So, so all in all, I think the program's working well as a kind of complementary investment platform alongside your defined benefit plan.
Questions for Lee?
I don't know if any of you guys saw that there's a legislator proposing a bill to eliminate defined benefit plans in the counties, so I don't think that'll happen, or if it does happen, we'll be long gone by that time. But if they did that, it would create a problem for these funds because you wouldn't have new money coming in, and it would be a death spiral, so. Anyway.
It is a concern, particularly those that are underfunded. And to your point, as you guys have seen, as these funds have matured over the years, there's a lot more money going out of them now because you've got more retirees and people coming in. Now, if this was closed for any new entrants coming in, someone's going to have to make up that unfunded liability. Where's that coming from? Yeah. So that, hopefully they don't just look at it in a vacuum, Harrisburg and the big picture.
Questions? Okay, thanks, Lee.
Thank you.
Yep. There were no executive sessions since our last meeting. I'll open up once again for any public comment. Hearing and seeing none, if I could have a motion to adjourn.
I make a motion to, you got it? Go ahead. Doug?
I'll make a motion to adjourn the meeting.
I'll second.
I have a motion and a second. Any discussion? Hearing none. All those in favor of adjourning signify by saying aye.
Aye.
Opposed? We are adjourned. Have a great day.
I forgot we were on retirement.